The empowerment share scheme MTN Zakhele becoming the first company to list on the BEE segment of the JSE. But with Nigerian troubles at the parent company MTN far from over and a whopping 5.2 billion rand fine looming over the business that underpins the scheme and already claiming the head of the chief executive of MTN, what next? Is it worth looking at these BEE shares as an investment? And what sort of melanin content do you need to participate? Or can you simply participate as it is all listed on an open market? This is the Moneymakers. I'm Bruce Whitfield. Tonight we look at BE shares and just how much their share price is determined by what goes on in the operations. I'm joined by Riaz Gardee, who's investment principal at MMI Holdings, and Craig Gradidge, head of investments at Gradidge Management. You've also seen him, of course, in Subwarner magazine. You don't get freebies in that Subwarner magazine for your adverts, do you, Craig?
No, we don't get freebies, Bruce.
You're doing a national duty of helping bail out SAA from the private sector.
We're doing our best.
Okay, no, good for you, good for you. These BE schemes, I mean, the BE index is brand new, it's just been created. There's some Sasol BE shares listed on the main market. Are they going to migrate, Riaz, to this BE index? We're going to have this little separate colony, if you like, of BE shares.
So, for example, Sasol has two BE share schemes in place. The one is already on the JSE.
That's Sasol BE on the screens, yeah?
And the other one is in Zalo, which is on an OTC platform. And they've recently announced the migration of that to the JSE as well.
Okay, so those will come in and come into the BE segment. That'll join then MTN Zakhele. But these are going to be schemes where you're going to have to produce, I don't know what, a copy of your ID to prove that you're not a white person looking to get a hold of a BE scheme. I mean, is that effectively what's going to happen?
Yeah, so when you open your trading account, you get the separate contract, which is about 20 pages long, where you make certain declarations. It's called a BE contract. And you make certain declarations saying that you qualify and you fall under the definitions as set out in the BE Act. So yes, people still try and get away with it, but there certainly is a paper trail.
Okay, so there's a paper trail and you might have people trying to buck the system, but why would you buy? Why would I want to buy an MTN Zakhele share when I could go and buy myself an MTN share? Surely the one is underpinned by the operations of the other.
Yeah, so these schemes are funded. So if you're bullish on MTN, because of the debt that sits within the MTN structure, you would get a much better return out of MTN Zakhele than out of, say, MTN directly in that instance. In some cases, you are buying shares that are unlisted. So Putumanati is an investment into multi-choice.
But I'm talking specifically, though, about going to the JSE and doing it, because I'm trying to understand at what point whether or not these BE shares listed on the JSE are unwound and converted into ordinary shares at some point in the future.
Yeah, I think another important point is the intention behind these shares was to do a transaction at a point in time.
Yeah.
And this is now the mechanism to unwind that or to deliver the value to the shareholders. So the original intention was not to have those specific shares trading, separately with an underlying investment, which is the same as the holding company. So they've gone through this process. MTN Zakhele in 2010, initially they had a 3-year period where there was no trading allowed, and then they have now a 3-year period where there is a locking period, and this is the period we're in now. And after that, that will vanish. So I think you need to look at it in the context of the whole transaction and what they were trying to achieve at the time.
Okay, so this is the scheme, but it feels like once people, there'll be natural attrition. Not everybody's going to hold on to their Zakhele shares for forever. There'll be some people who simply want to realize the cash and get the money out and go and do something else with it. There'll be others who want to stay invested. Will it be worth it?
Yeah, so these schemes, so MTN Zakhele in particular has until the end of, I think, November 2016 before that scheme matures. So the empowerment period ends.
And at that point, surely it makes sense then just to convert the Zakhele shares according to a formula into ordinary MTN shares.
Well, there was an announcement by MTN Zakhele last month saying that there may be an option to continue with some form of scheme. So
but why would you? And would they have to become an investment holding company, perhaps, that would then have a whole lot of other little BEE schemes coming into MTN Zakhele, for example? Or how would they do it?
Yeah, no, it wouldn't work that way. Each scheme is for a particular company, so Zakhele being for MTN. But certainly, I think to give investors a chance to build up a much bigger exposure. So if you think again, I'll use Putumanati just as an example to illustrate the point. But when they came to market, those shares were worth about 50 Rand a share each. So if you had 1,000 Rand, you would be able to buy 20 shares. But they sold them to the public at 10 Rand a share. So you can now buy 1,000 shares. And they used the empowerment period to settle the debt.
Okay.
So after 10 years, you now had 100 unencumbered shares, so to speak. Yeah, so your exposure was 5 times as much. So that funding certainly helps small investors build up a much bigger exposure over time.
So there's a rationale for their existence.
There is a rationale. It's to help the smaller investor in particular,
but when it comes
get
to
a meaningful exposure.
When it comes to listing them on the JSE, though, that looks like simply an execution mechanism.
Yeah, I think that was more about the FSB in terms of their definition of what constitutes an exchange.
Okay.
So they come into the market now, or to the JSE, because the JSE is an exchange, a legal exchange, whereas the FSB was saying some of the OTC platforms were operating as an exchange and they did not have a license to do so.
Well, the real question here is whether or not we actually want to stay invested in MTN at all, considering I bumped into the former chief executive at the airport just recently.
What did he say?
He had a small, he didn't say anything. I just went, hey, CBSO, and he just went, acknowledged my existence and moved on. He didn't want to chat. Monday morning, of course.
Bigger fish to fry, maybe.
Exactly. Well, I guess he had exactly that to do, or was just wanting to get out of town for a bit. But here we got Phuthuma Nhleko now back at the helm of MTN. Does it bode well for the long-term performance of this company? It's great business. It's got lots of great operations. It's got magnificent profit margins wherever it works.
I think the important point on any BEE transaction is what's the underlying share, because there's a direct correlation to that. And if you're not happy with that, there's no point in being in the BEE share. And the second part is the debt component. So that essentially what makes up the BEE transaction. So coming back to MTN specifically, we all know what's happened to them with regards to the fine, which has wiped out about 70-odd billion Rand of their market capitalization. And the question is where to from here. So in the absence of information from the Nigerian authority and
the company itself,
MTN, we would be just hazarding a guess. I would think the best and most likely hopeful outcome is they would come to some kind of an arrangement between them and pay a fine which is suitable to the crime, which.
There's no arguing that the fine is overdone. So therefore, when you look at it, as a black investor, would you go and try and get yourself some Zakhele shares right now and get the benefit of the structure of MTN Zakhele, or do you go for the ordinary shares, Gradidge?
Yeah, I think as an investor, the principle of diversification still comes into it. It's been there from day one and it's still there. So that is why you should have Zakhele, Phuthuma Nati, Yebo Yetu, and every other one that you can get your hands on.
Because the share schemes are structured favourably.
They are structured favourably. You've made very big money on Phuthuma Nati. You've done fairly well still on Zakhele at the current price, if you came in on day one. And you've done very well out of the likes of Tembeka Capital as well, but you've lost out on African Bank, and you've lost out on Valcom Yazani. So there's no guarantee in these schemes. The principle of diversification definitely persists and is still relevant for these investors.
But I think specifically in terms of you comparing the listed one to the unlisted one, the important difference there is the restrictions and the time horizon. So if as an investor you're not phased about the restrictions and the time horizon of 1 year, then that's a cheaper entry point.
Okay, it still is a cheaper entry point. You can still get better access into MTN than that. And let's face it, the cheaper you can buy a company, provided it's quality. Would you be going into Zakhele versus MTN, either of you?
Depends on the price. So at the moment, Zakhele is above what I call the net asset value for Zakhele.
Okay.
Because it's up like 12% so far. The last time I checked, it was up 12%.
It had a very good day on Monday.
Yes, but MTN was down.
Yeah.
So I think the relationship between the net asset value and where it's trading has changed.
Why? I mean, it's this people treating it a bit like PSG. There's nothing else in it. It's only MTN.
It's only MTN. Yeah.
Yeah, so basically, I mean, from my analysis, the Zakhele shares trades at a slight discount to the MTN, roughly 20-25%, and that's typically been in line with all of the BEE shares, whether it's Cecil and the others. They tend to trade around that kind of a discount to the underlying share for the reasons we mentioned earlier. Example, restrictions, illiquidity,
So
etc.
does that gap ever narrow enough? I know, Craig, you're saying that it's actually trading at a premium, and we can have a disagreement
Yeah,
on the
depends
methodology.
what price is used in his
Okay.
calculation. So for the last calculation I did, I got a net asset value close to 70, and it's trading at 75 today.
All right.
So it depends where the MTN share price. So there's a bit of a moving target. That discount has definitely narrowed.
But so
over the last year.
theoretically, there's an arbitrage opportunity
Yes.
then for smart investors
Yeah.
who can opt in and out of the schemes. But then can you opt in and out because you're restricted?
You can
That's-
trade.
Yeah,
what to do.
you can trade, but again, the volumes which are
Yeah.
traded are relatively small compared to the underlying. So in theory, that may be the case, but in practical, it may be more difficult to execute.
All right. So, I mean, so the Putuma Nati, the most successful BE scheme of all time?
No, it's not.
No.
Dumanati, it
Yeah.
may be, and
Yeah.
Tembeka Capital.
And
yes.
Tembeka Capital, very good. But we haven't seen any of these schemes come to market in recent years, have we? Have they died a death? Is that fad over? Are we looking for a new trend?
Well, the FSB regulation essentially brought an end to Tembeka.
Yeah.
Because they said, look, we're not going to go the JSE listing route. We're going to unwind the scheme. And you got PSG shares in exchange
Yeah.
for your Tembeka shares. Some of the guys are looking at the ZARX platform that may be coming. You interviewed
Yeah, no, absolutely. And that, but,
Etienne recently,
but
so
this-
they
but
may
this-
be opting there.
but this looks like the JSE is moving really fast to
Yes.
we're having like Brian Abanner and cutting people off at the try line on this
Well,
one.
the JSE's infrastructure is there.
Yeah.
So, and Cecil has been there for the last couple of
Yeah.
years. Sol BE.
Yeah, but we're not seeing
Yes, I think-
introduction of new schemes.
Yeah, I think the reason for that is, amongst others, is the debt. You need a lot of debt to fund this year. And also the prices of the companies have dropped significantly. So the sellers are also not necessarily all the time there. So it's a combination of the market factors which has led to a reduction in the number of VE transactions, the economic angle.
But there's public pressure all the time. The
Yes.
government wants, trade union movements want more empowerment, and we're stuck in this very odd environment right now where the schemes aren't being done. We're not getting any further empowerment, and what's the next step, Craig?
So as a company, you can either find a strategic partner, you could do a deal with the public, you could do a deal with specific interest groups. So I think a lot of the guys are opting for any one of the others and not to do a deal with the public, because
Big, fat, and expensive.
it's expensive and it's risky. When Cecil did its deal, at the first AGM post the Cecil Inzalo deal, there were a lot of shareholders there accusing management of having stolen their money. So because you're dealing with a fairly uncontrolled group and quite a broad group, it can backfire on you. And I think maybe some market participants notice the Cecil experience and say, well, maybe we
Backed
should
off, yeah.
try one of the other
But I
options.
think
Last word to Riaz.
Yeah, I think in terms of success, having a public scheme would achieve the most objective in terms of a broad-based shareholding, and you want to bring all of these people into the.
And perhaps the DTI
economy.
is, talking about cancelling the significance of broad-based schemes didn't help very much either 6 months ago.
Yes.
Maybe that's the point there too. Riaz Gardee, who's investment principal at MMI Holdings, and Craig Gradidge, head of investments at Gradidge Management. Thank you very much for joining us, gentlemen. Nice to see you both. There'll be more share price issues, more ups and downs tomorrow. Till then, good night.